There we go. Okay, so live. All right, just letting everybody know how to get on to this live stream. I know you guys don't want to watch me do this, but live streaming, right? Come check it out. maybe that. Okay, so let's take a look at today's market. We have had, I think, a very interesting day. If you remember yesterday, we had an interesting situation. If you, not that you need to go watch it at all, but you can go watch the previous days. I think it's June 1st. We had the bears come in right about in this area. And throughout this whole thing, right through here, this section, we were looking for a liquidation. Right? We wanted to see these bears through this whole afternoon. That was all I was thinking about all day, was to see them liquidate. And throughout this here, we didn't see that. And then we saw something interesting. You can see right here that we had an impact. So right through here and here, the bears came in and sort of didn't push like really hard. There's a little bit of a push. You could see the push as tension moves here. So the thing that I was asking is why? Why would the bears hold through so much risk in an attempt? In my opinion, was that they saw something. They knew something that they were looking at, and they were not willing to let go. They were tolerating a lot of risk. And then overnight, you could see that whatever it was that was known finally happened. They into the close, the market just didn't work out, closed up, and then it came down. Now this was interesting. So what happened was something that I like to call ruin everyone's day. And I'm just walking through this because I think it'll help explain what's going on right now. We had right here yesterday some bullish players. We had some in the open too. These are the ones I want to focus right here. So we have the bulls come in, the bears give it a hit here, and the bulls were sitting. And we had stop losses sitting just under that right there. So we were looking at that, and the idea was if you want to ruin everyone's day, what you do is you wipe out as much liquidation as you can without taking out the root position. And that is what happened overnight. You see there's that. Here's the open is right here, and they came down overnight, essentially pushed out anyone who is sitting in that secondary position before the market did finally open up today. And it did end up liquidating the bears. They got totally pushed out. They got destroyed this morning. If you didn't dump last night and get out of your position, then it's important that you know that right here, you could see that hook. This was what I was looking for all yesterday afternoon. It was this. You want to see it push up. You want to see them get liquidated. That didn't happen until today. And it's like the market favored the bears. It let them, if they did, it gave them the opportunity to get out of those positions. Because you remember right here and right here it was right there. I got that one wrong. Right here, we had oh wow, it got, okay, so this was a risk reduction or a decay retest. The whole point is that we had a position here, we had a position here for the sellers, and overnight it gave the opportunity for the sellers to get out, or at least hedge their position with futures. So this morning, what happened? Into the close yesterday, we had, remember velocity, we were tracking this. If you didn't watch it, I'll sort of go over it. We're tracking velocity saying, well, this isn't going to sample the bulls until the open. Right at the open, it pushed down, sampled right at the lows, and those bulls came in. Now, I think it's interesting. You should, if you're looking at last night and you say, oh my gosh, this ruined everyone's day, now it's going to go liquidate everybody. And you can see the overnight session last night was pretty aggressive to the upside, and it was looking to take out any bears would hang on. The bulls came in right off the open. Decay pushed under, velocity pushed under, trapped orders. This was a really nice bullish sample. And that gave you pretty clear. Then you take a look over here, and you can see that there was bullish impact. And then right after that, the bears came in, but these bears were no better than yesterday's. There was no expectation for them to show up, and then we see them get liquidated. You see how price just shoots up right here at the same time right there. So what am I looking for? Why do I care about that? It shows that the bears from yesterday finally unraveled their positions. They unwound. How do I know that? Well, price moved, which is a big deal. That shows that institutions impacted price. But more than that is they accelerated tension. That says to me, hey, bears, you just unwound your position. I know that. I can see it. So at that point, I can say they're out. Immediately after that, look, we had a sample again of the bears right at the high. So these bears, this one's different. This one was previous. It was before the liquidation. This one was post liquidation, after. So it's important that you understand how an auction works. Auctions rise until the buyers are done. And in this situation, the buyers will push the market until the sellers can't tolerate it anymore. That's how it works. And as soon as the sellers were done, right? They're done. They liquidated their position. Fine, we're out. You can think of this as the philosophy of open interest theft. What is open interest theft? Well, open interest means the contracts, because step one in building a contract, you get two people who want to get into a contract together. That's the creation of open interest. This, people can see this. They can see the open interest getting created. So institutions don't want to create contracts. As best they can, they want those contracts to get created, and then they want to have those contracts converted over, and I call it theft because that's what it feels like. Someone else does the work, you come in and take all their work, and you use it to benefit. And so you want the market to create the piece that's easy to see, and then you want to come in later and pick up that hard work. And so if you think about bears getting liquidated right here, so these people, or see, we had some here, we had some here, and we had some here, if I remember right, not this one. These positions all just got dumped right there. And so you could say, if they're getting liquidated, does the market just let them go? Or can we convert those into liquidity to sell again? And it looks like, from where I'm sitting, the bears get sampled right after the other people let go of their position. It's like, that's open interest theft. This is going to be liquidity. So consider how the bears are thinking here. And then it moves down. You can see the bears, not that right there. You can see the bears hit as price sweeps. You look over here, did bears hit? Well, yeah, a little bit. You can see there's not a lot, but they did impact tension. So there was some impact, but it wasn't great. It wasn't like, I mean, it is moving down, and that's important, but it wasn't like a move down like that. It's like it is down. So the bears are the bears there. Yeah, there's absolutely a bearish hand sitting right here. Don't be crazy. They took that liquidation. They took, it was the open interest theft, the OIT, open interest theft right there. They hit that. You could see it impacted tension. It moved down, and we get a bullish sample right here. Now you have to ask yourself this really important question. Are the bulls interested in buying? And at this point, well, yeah, we saw them here. They came in, they hit, they impacted tension. So yes, you expect bulls to hit, and they did. Did they impact tension? Yes, it started to rise. So do we have bulls and bears right now into today's close? Absolutely. Absolutely. We have bulls and bears on both sides, capping both the high and the low of the range. Okay, we have bulls and bears capping the top and the bottom of the range. These are players who have the funds to do this. They're interested in participating. You just got to be careful that you don't think, well, because the bears got liquidated, obviously the market's going up. No, this was never about going up. I mean, up and down are just, it's just where the money is. Who's wrong? And in this instance, we're going to make some assessments about that looking through the rest of the day. But right here, you could see the bulls showed up. Could you have bought with the bulls? I think if you were willing to take into consideration the previous day and the overnight session. I think if you just took into consideration the previous day, it would have been higher risk, but considering the overnight session and saying, oh, this market pushed all the way down, liquidated the bulls who were holding, or at least ran where their stops should have been, and then pushed up, and then I think yes. I think the bullish position off the open, yes. If you had realized what was happening, the bears were holding too much risk, we needed to liquidate them, the market was being funny, the bears were trying too hard, we liquidated any secondary positions. This looked really good. Yes, you could have bought if you considered all those things. You needed to understand how the whole day worked, though. If you just bought the signal off the open, that was wrong. You shouldn't have done it. If all you did was wake up this morning and you sat down and said, I see a bullish sample, there's the trapped orders, and you bought it, that was wrong. You acted on an improper, that was not a good trade. But if you're doing it because you saw what was going on in the narrative and you said, I think the bulls are going to play here because of what's been happening, then yeah, that was a great spot. It's important that you make a distinction between those two. Taking a trade and making money is not the essence of what makes you right or a good trader. So then the bears failed. So again, if you had seen the bears fail and you tried to sell there, was that a good trade? That was a horrible idea. The bears were still looking to get liquidated. After the liquidation, would you have sold with them? Yes, the bears were done. They got pushed out. They got destroyed. It's over. The thing we waited for all day yesterday finally happens. The bears are done. When bears are done getting liquidated, then the bears can actually have a chance. It's just the way it works. So having it pushed down and seeing the bulls get sampled, was this a reasonable thing? Yes, we saw the bulls participating. They had a track record. So I'm trying to say this because it's like, were any of these actionable? And it's like, well, yeah, I think they were, but the scope on them is sort of limited. The best trade that I see here today was this one. Out of all these things that you could, or maybe you did or you didn't do, that was the best one. Why? Because, well, the bulls still want to liquidate those bears. The bears are still trapped in from yesterday. It gapped up, and then we trap in. So I think that was the best one. The next best trade, I think, would probably be here, and the third one here. So I would rank this 1, 2, 3. Why this one? 2, because these bulls already had a precedent. They'd already shown success. The bears had shown failure twice and one success. So we had like almost like this was success for the bulls. This was success for the bulls. And basically yesterday was a little support too. So being like, well, the bulls have a better track record today. So that would say a second. The third one, I'd say this was hard. This was that because it was hard. And so selling here would be a very difficult thing to do. And you could tell. I mean, you could usually tell how difficult something is by how fast it moves. It's typically things that are hard to do move quickly as demand comes in because people don't like doing hard things. Overall, at this point, I don't think there's enough information to really say exactly what's going to happen the rest of the day. I want to make that clear. I think there was enough information to take some trades, but the scope on those, except for the first one, I think is very limited. That if you were to buy this second bullish position, where's your target? What are you trying to do? Where do you think it's going? Who's trapped? What's the conflict, the issues? Like, nah, I don't know that you got a whole lot of that. You don't have enough going on to justify stuff. I think this bullish position had enough. Okay, but this one was, in my opinion, the complexity there was high. Why was it high? Well, you had to understand this entire day. That was 6.5 hours of analysis to come to the conclusion that first bullish position would be a good place to buy. It was not cheap. It was not easy. It was a lot of work. The complexity was high. It cost multiple days of analysis. So high. This one, I think, would be medium. Why? Because all you had to do was recognize that the bulls successfully pushed this up. There was a liquidation. The bulls were doing much better. So it was medium. You need to know about previous events. And I think this one right here could potentially be, well, I'm going to say it's high. I think it's high. And the reason for that is because this liquidation right here, maybe you would have seen that and said, oh yeah, they're liquidating them. But really, you needed to know about the rest that on Monday, that's all we were watching after 11 o'clock was just the whole day was like, Where's that liquidation? What are these guys doing? What the heck? You kind of had to realize the precedent set there to go, oh, they're liquidated. This is a big deal. And then trade that. So I think it was a high. So the complexity was difficult. Okay, so now that we got that out of the way, if you have questions about any of that or it wasn't super clear, let me know. Do it shirtless? I'm gonna do it shirtless. Okay. So we got this first section done. Now moving forward, what's the concept that we need to look at? So right about here, you know that there's going to be some liquidations below, liquidations above. That's how it's going to work. We got positions in the market. We'll take a look here at tension. And what's happening? Well, we're seeing, last night I was looking, saying we could see some elasticity, which would look like this, but only if bulls failed first. So at this point, did bulls fail at 11? We'll say right here at 11. At this point, have we seen bulls fail in such a way that you should expect tension to start moving down? No. Bulls hit here, liquidated bears. Bulls hit here. There's no expectation of tension going to zero right now. You expect tension to head to zero once bulls move out of the way. Well, why do you need bulls to move out of the way? Can't bears just come in? Can't a news event just topple this market? Maybe-ish. Because the bulls are in control. They have control. Look at tension. Just look at it. And what about context? Bulls just liquidated bears. They're in control. They are in control. This bearish position right here really only worked because it was approved by the bears. It was fine. The bears just got liquidated. It was fine. Bulls just got everything they wanted. So that's really important to note. It's like, well, are we going to is this starting to move? No, because the bulls haven't moved. So at that point down there at the lows, you shouldn't be anticipating this because you have no data points that suggest that the bulls have moved and the bears are motivated. So moving forward from there, we're not getting this. It just sort of moves up. And basically, we're just seeing like a holding pattern. You want to say the bulls are going to pump this away, but we sort of got our liquidation and then nothing. In order to get this to pump up higher, we need to do what happened yesterday, which was trap in some bearish positions, which helps pump things higher as those bears hold on. So that's what we would need. So let's take a look at what happened after this. So what I'm trying to establish here is that going forward from 11 o'clock, from this point forward, what expectations were reasonable. And the reason I'm going over this is not to say hindsight's 2020. The reason I'm going over this is because if you don't understand what you were expecting going through there, it's hard to interpret things as clearly. So there's no elasticity. Meaning there's no expectation for tension to move down towards zero. Okay? Pumping the market up. So if tension was going to go like this, that would require some conflict, some drama going on, but we already blew out the bearish position, and that's going to make it a little more difficult to get them to do it again. So I would say lower expectation, because twice in a row is a lot. I mean, think about it. It took all of Monday and into Tuesday to convince bears to liquidate. Take a breath for a minute. Can we do it again? Well, yeah, we could do it again. Just remember the difficulty there. So lower expectation for this to shoot up. So it's like no and low. So there's more of an expectation for rising. So at this point, you say, I expect tension to try and pump upwards. So we're going to look for the bulls to try and pump tension. So moving forward from 11, we get decay moving up right here, right? And it hits, and look at this, there's time. This is slow. It like took from here to find that volume, right? So the signal, the positive energy, and the trapped orders don't quite line up. You could see, oh my gosh, my brain, sorry, that it's here. So we get our little, there's our signal, and right there. So it took a little while to find the buyers. The bears didn't get any. So this is a little noisy. Moving up here, we get there. Okay, so this is the one right there. It samples, and this right there, it took like 10 minutes or so, 5, 7, 10. It took a little while. So this was slow. So we get no volume here for the bears. We get slow volume, and slow means the signal happens. There's, a couple minutes or more, or a long distance. So price moves really far, takes a while, and then you find that volume, and this distance is greater than maybe what you're used to, and that's slow. I call it sort of unorganized. What it looks like to me is the sales pitch struggling. You went down there and you said, hey, does anybody want to buy here? Look, positive energy coming into the market. And people were like, no. It's taken you time to do that, to get that sales pitch going. So there was a little bit of slow here, but the bulls right there, look. And looking over here, not much of an impact, but it's still sort of generally moving up. So whatever people got trapped here, there's no impact here. So fail right there. So there was success, failure, failure, failure. So they have one bout of success. And then it moves back down right here, and there's the bulls again. And you could see they came in and popped up tension right there. You see that? Whoop. So bulls are here, 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 and here. Bears get slaughtered here. So at this point, what are your expectations? Just step back a minute, look at this under this context. We don't have the expectation of tension coming down. So the downside is really not what you're expecting, unless there's some exotic news event that comes out that was hard to know. In that instance, which is what I think the Bears were playing yesterday, the Bears, they tried to bluff. They tried to. They really did. They tried to make it look that way, and I was like, they know something because they're not letting go. But after the overnight session, having it open up, I think that just essentially worked against them. So your expectations are to the upside. I mean, at this point, you have bulls successful, bulls successful, bulls successful, bears failing, bears couldn't find trapped orders, bears win right here, which was a pretty good hit. Bears failed, bears failed. Win, 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 win. What do you expect? I mean, do I have to explain this? Hopefully you can see that it's practically self-evident. Now what we can do is go ahead and draw a line. We say, here's our root position really. But this was associated with that, in my opinion. So I think that this is the first spot. Then we have 2 here. So these are the bullish positions. I'll just mark them green so we can distinguish between the two. And we can mark this red one. This is where the bears are sitting. If they have a position, that's where it's at. I mean, then this was all known at this point right here. So I'm trying to model how these events are impacting your perspective as it moves forward, because that's the most important thing. And at this point, we just have winning by the bulls. So it pushes up, and look, decay doesn't give us another sample. We don't get another sample here. There's no bearish sample through here. It's just bulls win, and it pushed all the way up. And at this point, your expectation is a liquidation. You want to see this go, and you want to see tension. And look, tension sort of gave us a curl there, which was this dip on this move up. There's a little, you see it? I mean, you can see that, right? Little curl up. So that was here. And who did that? Was that liquidating? No, liquidating is a forced thing. That would be up here. This was pressure from the bulls. We saw this yesterday. Remember this move down here? There's a little bit of a dip right there. So there, you could see the pressure from players coming in and sort of impacting right there. The bulls sort of gave us some pressure. And look, do you see bears here? Are there bears in this section? No, no bears. Okay, so at this point, look at decay moving down. We're getting, so there's a decay retest going on right now, but really quickly, let's get through this so that you can see how you build this, put this together. So we have this first section right about here. This looks like bullish information to me, but you could say there was some bearishness, so I'll just give an arrow. At this point right here, you can see there is bullishness and bears are terrible. It's just up, 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 up. Right here, well, actually, it'd be more like right here. Let me erase it. Okay, so right here, you wanted to see those bears get liquidated, right? Look at tension. It's like, eh. So you want to see them get liquidated. So at this point, there's a bullish precedent, but a question mark. Like, why didn't you liquidate? And it came back down to the last positions, this one here. You could say it was that, but I think it was just these guys right here. I think this was retesting this, not this. And so we see some bullish push. You see that? So we have this like bullishness in the market and a question mark that's like, well, why didn't you guys liquidate them just a minute ago? And they did this yesterday too. It was like, why did you guys take so long liquidating these bears, you monkeys? And you remember this right here? It was like they knew the stop loss orders were right there and then stopped and let it drift down, and then it finally pushed up. It's like, you guys are just playing games all day long. Well, it pushes down, and now we're getting from way back there, we're getting a decay retest. So this is a bullish decay retest. It's a very multi-day thing. You also could see one here. Let me get a horizontal line so you can see. Well, actually, let me just do this. Not that. This. I'm going to turn on the crosshair. Okay. So right here, bullish position. Let's draw that. So there was a decay retest right here. And you get the wide short. So there's the wide sample. Here's the short time frame sample right there. Okay, here we go. So it's moving now. All right, so I was hoping to get to this before this happened. So I'm trying to go as fast as I can. We're getting that decay retest. There's the wide one. There's the short one. So this is the one you want to look at, not this one. I prefer these. And we got a wider decay retest right around that same spot. It's moving up. Bullish, 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 bullish. Okay, let's look at the other side. Failure, 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 success, failure, nothing. This is nothing but up. There's nothing else going on here. But I tried to get through that before because I was figuring okay, I don't want to say I told you so. Okay, do you see what's happening? Bulls, 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 bulls. Bears get destroyed. Bulls, bulls, bears get destroyed. Bulls, bulls, bulls. That's what we're seeing today. That's all we're seeing today. So it's going to move up. Okay, so look at tension. Do you see tension curling right here? You see this? Boop. So what does that tell you? What's happening right now? 3071. What is going on? I'll tell you exactly what's going on right here. These people couldn't take it. So I could color this dark red and say, there it is. The bears liquidation pushed up. How do we know they got liquidated? Well, it's not because of the big move. This isn't that important. It's that here's the high. This is where those guys are. You got through that and then swept up. This is not what I don't care about. It's the sweep up here in conjunction with the curl there that let you know that these people started to liquidate. It swept up, and they're doing so curled tension higher. Do you got that? I mean, do you see how we got to this conclusion? It was bullish, bullish. There was no bearishness. There was some bears. Let's see anything. There was nothing. If you see something, let me know, because I think this was straightforward. So if you guys see something, let me know. Maybe I'm missing something, but that's what I'm seeing. So we have these bullish positions here. We have this. Now, we could look at the downside. So it's always good to take a look at the counter side. I know I want to like get enthusiastic and like start talking about what's coming up next, but really quick. So we're right here. What's to the down? If we move down, there's some stops here, and they'll be pretty close because that was a decay retest. So at this point, I have a hard time believing that if price came down, that anyone significant would still have stops there. You're stupid if you... At this point, you need to have your break evens on, okay? I just tell you that right now because this might take a minute. So if this popped up, liquidates these people, now you say, oh, good, I'm right. Everything was validated. Then you put a break even on. But from where I'm at, what I look for is these impulse moves. This was the impulse move, not this. Okay, let me say that again. This is the impulse move, not this. Got it? Why not this? Well, this looks impulsy. Well, because we were still establishing really what was going on through this section. So maybe you could call this the impulse move, but it looks to me like they created a little drama by giving us a decay retest in this low. So this was the impulse move. This one established. It was more like the establishing. And then it was pretty clear we move up. But you didn't really, if you bought right here, okay, you're like, I see what's going on. And you bought here and it moved up to the high. You were never right. Okay, this, sure you were profitable, but you were never right because it didn't liquidate until here. This is when you knew you're right. So that's why I say you don't really want to put your break even on until you know you're right. You're not out of the woods yet because it hasn't done what you think is going on. So this is finally saying bulls are right. Bulls are right. And not only is it doing that, it's the second time today. This is nothing. We did that here and we're doing it again here. I'm sorry, bears. It's over. You guys got destroyed twice in a row. If I were an institution with lots and lots of money, and I had a bearish trader come in and say, let me convince you why you should invest in our idea, which is down. I'd say, okay, so what's your track record right now? We have been slaughtered twice in a row, devastated. It's very painful, but the news has said we're right, but our accounts are actually negative. We've closed the positions at a great loss. And the bulls show up. We have been slaughtering everyone. People are just selling left and right, and we're just punching their faces in, and it's wonderful. If I were an investor, I'd say, I really like what you say. You suck. And so I'd give all the money to the bulls. And in this instance, and I hope you realize, the bulls again, okay, I just have been willing to put in the blood, sweat, and tears that it takes to build a major trend, not the bears. Okay, so the bears have done cheating. They tried to cheat. They lost money. Then they tried to cheat. They lost money. They tried to force the market down. They lost money. They tried to beat the bulls who bluffed them into some Trump news. They lost money. They tried to cheat again. It was a bluff. They lost money. They just tried to sell the money. They sell the market. Just open interest. They lost money. I'm sorry, bears. You're horrible. You're all horrible. You're not doing anything that's persuasive. And this thing that I just said where I was doing this fun, like dramatic, I'm trying to make it dramatic so it's interesting. 2 weeks. This is 2 weeks. For the past 2 weeks, you've just done horrible. So what's the trend in the market? It is not just a price regression. We're not just looking at this going, price is rising. No, that's not what we're doing. What we're doing here is saying we've put the bears in the ring multiple times with the bulls, and the bulls have pummeled their faces in every time. All times. So the trend has to do with these behaviors. The fact that you can regress price to the upside is just coincidental. It is coincidental. It is an outcome of bears just being terrible again. So I just want to make that clear. Like, we're coming to the conclusion that the bulls are in charge of the trend, not because price is rising. It's because the bears keep getting their faces kicked in over. They try to cheat. They try every trick in the book. They have, in my opinion, they're just dumping as much money as they can into the news, but it ends up, who on earth are these bears that are willing to lose so much money? And you have to start getting skeptical that a large institution with billions of dollars, resources, friends, ear to the ground, insider information, is this terrible? I don't have that much power, and I'm not that terrible. I'm shorting this, I'm buying every day. That's all I've been doing. So I say that because I think it's silly to think that an institution with so much power and influence would be so silly. So this pulls us back to the philosophy that there is no bulls and bears. And we've talked about this before, but you need to distinguish them because they have very distinct personalities, sufficient such that it's more effective to treat them as separate entities than to accept the truth, which is that there is no separate entity. There's one entity, which is make money, and I don't care, up or down. So I think this market is essentially just a bunch of bullish traders doing bearish things because that's essential. You have to have two sides. So I want to make that clear. Okay, so now that we've liquidated our friendly neighborhood bears, let's talk about what's going to happen next. Now, last time, why did it do this? Why did it come back down? How come we got that open interest theft right here? Well, I'll tell you, because this was lingering from the previous day. I mean, this is like it's like somebody punched you in the mouth, you know, and your adrenaline pumps. And then the next day you see them and you're like, "Hey, you hit me in the mouth." It's like stale a little bit. And that means, in my opinion, that there's a little less enthusiasm behind it. You have to remember, the bulls are not just people who take money and put it in and sit back. The bulls are the people who came in and they bought right here against liquidity, and then again, and then again. And then they started to pump the bid, right? They're pumping the bid. They're going out to the stocks and they're buying up all the orders, trying to buy all those up. They're coming in and trying to sell so that we get certain things happening. They're picking up decay retests and filling in the market. They are active the entire time until confirmation. So from the previous day, it's like a little bit stale. It's a lot of work. But at this point, we're liquidating the bears and it's just over. I mean, it's over. So we have twice the bears get liquidated. The bulls were very patient. And I want to put this into context. The bulls have been doing the work. They got the positions. They were able to get everything they wanted. That's what's going on. I'm trying to say this because I think that there's a big disparity between the world that people see and reality. And I asked an 11-year-old this. I said, if you were watching the news and they said every 11-year-old is dead, and then as an 11-year-old you went like this, you're like, no, I'm alive. Who's wrong? And the 11-year-old said, she thought about it for like 30 seconds. Like, are you kidding me? No more TV for you. The data. You're not dead. And then finally said, I'm not dead. So the data here is saying the market's bullish. And everybody is seeing narratives and things in the public space that is quite contrary. This is the heartbeat. It's heading up. It's impossible, or if not, just very difficult for me to say that I believe anything that comes out of anyone's mouth in any public news forum, because their reporting seems to be the utter antithesis of reality. If we're measuring reality as sampling all the billions of dollars that traded over the trillions of money that's traded, and the behaviors and actions of all the traders combined to result in higher prices, then what we are seeing is that reality is bullish. And if you're not saying bullish, you're wrong. And if you say bearish consistently over and over and over in the face of being wrong, you move from wrong to deceptive. You can be wrong once or twice, nobody cares. 3 times, sure, we'll forgive you. But consistently wrong over time and never right is really hard to stomach. It's hard. It's hard for me to think that that's... Okay, so now I'm just venting. All right, so now that we have this, the market just closed. Let's take a look at what's coming up tomorrow. We're faced with negative 46%. Okay, so ask yourself, can 46% continue? Could we go further? Sure. Why not? Sure. Yeah, we could go up here. What, up to 70%? That's really high. This is high, and it gets difficult to sustain, but it's not impossible. I mean, at best you could say, yeah, it looks a little difficult. And when I say difficult, I don't mean that it's like they have to work hard. It's that difficulty in the market means that you need to play with your opponent. It's difficult to want to play with the bears if you're bullish. But difficult in this instance means, well, we'd need to say, okay, bears, come into play. And the only way you're going to get bears to play, the only way, is if you give them a legitimate chance to win. They don't want to play if there's no real chance. Okay, so that's why it's difficult, is because you have to take your sense of security, hand it over the bears, take a deep breath, Because if they can't actually win, they can't actually lose. And if they can't actually lose, we can't pump tension. Okay, so that's important. It's important that your opponent has a fair chance. It's not, in this world, which is an anarchical world, game theory is king. It is not, we're so used to police and teachers and there's a right and there's a wrong. In an anarchical world, there's only one real rule, which is if I don't have to deal with you for eternity, I should kill you in the most profitable way. There are no other rules in anarchy. Anarchy is the worst idea. It is a game where that you kill people who are not permanent and you take their stuff at the best, in the most advantageous way. There's no other rules. I don't care. They're all stemmed from that. It's the base rule. If you're not eternal, if you're not a problem I have to deal with forever, then I look at your stuff. And it's essentially the Cain economy, Cain and Abel. That was the first time we saw it. There were no rules. Cain decided there were no rules. He was mad. And he killed his brother and took his stuff. That's where this all stems from there. That's where it all started. That was the first time we got to see this, what anarchy looked like. It's also international politics. That's how international politics works. Having nuclear stuff means that you're an eternal threat. It means you're real. If you don't have nukes, then my goal is to take advantage of or kill you in the most profitable way. So having nukes basically says I'm a permanent player and you get treated differently. And so this is important to recognize that this game has to do with permanence because it's anarchical and it's game theory. If you're operating in like a classroom, it's not game theory. You don't use game theory against a teacher. You use compliance against a teacher. You use compliance until you gain enough power to win. So that's important. So in this instance, can the Bears, the only way the Bears are going to play in an anarchical system is to say, do we have a fair chance? They're not going to participate. They don't have to. So that's important. To the downside, how could we do this? And I actually think this is probably likely. Why? Well, we won, and this is the victory lap. So what happens is when you get a set of traders who have just won the race, the buyers stop buying. They're done buying. They won. And so you have to be careful buying in after the victory because the game is over. And so it tends to be that the people who trade after the victory are the ones who generate the conflict in the next cycle of events. We just had a major victory by the Bulls. The victory lap. Now is not the time to be buying, if maybe holding. But buying right now means you're trading the victory lap. You're going, oh, they won? Well, they're in charge. You're like the poster child for market chasing. You need to get in before the victory when you see the victory is likely. Okay? So moving forward from here, is it likely that the Bulls will continue? At some point, yeah, because we've just pummeled the bearish case. Is it likely to go straight up overnight and into tomorrow? I think that's a silly proposition. We need some conflict. We need some things happening. The Bulls are going to want better. I mean, they just won. They want something better. So I think elasticity makes sense, but you need to see it first. So the first thing you'll need to see tomorrow is a bullish sample, just like today. And if we're going to get an elastic market, and somebody was asking about burn-off, so if you're listening, this is, to get a burn-off in this way is the Bulls move. So if the Bulls don't, they're just like, they don't show up. It just goes like, and price maybe dips a little, and then it just goes like that. And tension just moves down. Where were the Bulls? Then you say, the Bulls are saying these prices are a little high. Maybe we could hand it off to the Bears, and then they'll have a fair chance to play, right? And the Bears say, and they'll come in. We get a bearish sample, and tension moves down. And then the Bears, so price would look something like, it would go down, maybe something like this. And the Bears get sampled, and then they drive price down. I don't know how far down. And they would do that with the scope of getting tension to 0. So it'd be something like that. And this is where they're going to make some money. Why would the Bears do that? Why would the Bears do that? They just got slaughtered. Well, it's because the Bulls moved and said, okay, here you go. This is important because remember, if we're going to pump this higher, you need the counterparty. So we need to give them a fair chance. Here you go. So they're like, yes, they get to take the market down, but it's permission based. Do not wake up tomorrow, see a bearish liquidity in the morning and say, oh, bears are going to drive this down, because you have not received permission from the bulls. If you took that trade, you are betting on the fact that it's going to sample the bulls and the bulls are going to fail, which is a little too risky for me. And it's a bad bet. You can't know that the bulls will move until you see them do it. And you shouldn't start seeing things until you see things. You need to see the bulls move before you start thinking you see the bulls move. Do not give in to hallucinating data points you haven't seen. So is it likely? Yes. Does that mean you should jump in at the first sign of bearishness? No. Because if the bears get too enthusiastic, just like I was warning you against, to say everybody says, oh, bears are going to come in, it's going to be elastic, then bears will start shorting. And then shorting and shorting and shorting and short. Oh no, they're shorting all the way up. How does that work? Well, that's where you start looking at the tick and you get an inversion. The sellers are just driving it up. So if the sellers get too enthusiastic off the open because they know it's happening, they're going to pay. And that is going to fund this. So that's what, wait till you see it before you see it. If you don't see it, this is bullish. Until you see the bulls move out of the way, and then the bears can come in and grab some liquidity and start cranking things down. And then at the end of that, the goal is here for the bulls, right? We're talking about the bulls. The bulls say, well, once it's down here, we'd rather buy with tension here because then we can pump it way back up. And hopefully price would do something like this. And then at that point, we could buy in better prices, better tension. Do you see how that the bulls will be like, okay. And the bears come in, right? They get to make some money. Plus, at this point, okay, so we're thinking like bears. They could say, if the bulls fail here, we might be able to get into a good spot. If they failed, ooh, we'd have a winning position we could add to and dump. So that's important because it gives you could see how it gives the bears a fair chance to participate and possibly win. And that creates the conflict we need. We need that conflict to generate further and further prices. If there's no conflict, then who's going to pay? And the bulls don't want to pay all the way up. It's like buying a business and then working at the business and then doing all the work at the business. And at the end of the day, you say, yeah, I made money, but man, I wasted all my whole life. Like, you want to buy the business and make other people slave away so you don't have to and you can go do other things. They don't want to do the work all the way up. So the conflict is motivated. This is behaviors. Why would they do? Because they need it. They want it. They need each other. This is anarchy. This is how politics works. They need each other. So we just punched the bears a whole bunch today. Tomorrow there's a chance for bears to come in. I think that at 46%, that's not too bad. I think both ways are likely. We have beat up the bears a whole bunch. We saw a bunch of just destruction. We pushed through the highs, everything. I wouldn't be surprised to see some spillback before a rise or something along those lines, because that makes it hard. Do I think you should buy right now? No. Do I think you should hold a long right now? Yes, I think you should. I think if you're long right now, and we've seen all these events, if you're gonna, well, if you're just looking for an intraday trade, like if you traded today, then no, I think you should try and get the best price you can. In this analysis, I don't see a way to justify further intraday. Multiple days, like if you bought like last week and you're holding a swing, I think this is good. Context says the bulls are winners, the bears are terrible. Yeah, we might see a pullback, but as far as I can tell, this is still looking structurally bullish. So hold a trade, don't enter a new one, because tomorrow has a good chance of pulling back down to burn some of this off before I move higher. And if we're going to go significantly higher, that means tension's going to get significantly higher. And so burning things off. Now, the other type of thing that could happen, okay, there's one other thing I need to talk about. If the market opens flat, well, actually, it doesn't really matter. The market opens and we just see a whole lot of nothing and tension's moving like this. And you're like, man, who is pumping tension? Who is that? There's no bulls or bears. It's just a burn off. It's essentially like you have like a car you've been pushing uphill and then everybody quits playing, which wouldn't be unreasonable. Bears just got destroyed today. So if the bears came in tomorrow, they stayed in bed tomorrow because they're all sick to their stomachs. I don't want to play. I don't want to play with you. All the bulls have to do is hedge. So what does that look like? Well, it looks like options coming in. You see a lot of options volume. You see a bunch of options volume right here for puts and stuff to hedge their positions. And then we don't see any buying or selling tomorrow. Probably going to see a burn off. And the car that you pushed uphill sort of rolls back. Bulls are fine with that too. Typically on a burn off where you don't have a motivated, like tension isn't motivated. It's just what happens in physics. Then price will move around and then close somewhere where it opened. The goal for the bulls is to get to not lose your price footing while burning tension as far as you can. So you don't want to lose your advantage, but if you can burn through that tension, it'd be good because that gives you further room to move up without having to run into the physics of, blow-offs and stuff like that can reverse markets. So there's those things. We've got 3 things that could happen. Continuing tension higher means we need to trick those bears in. And I don't think that the bulls are going to do that. I think if it gaps up and we just see tons of sell volume, it's probably going to keep going up because they're too enthusiastic. Got that? So upside, we gap up or something and the bears sell too much. It's just going to drive it up. If we open, sideways or even up, and the bulls get sampled, you see a bullish test, and then they do nothing, the bears are going to sell that down. If the bulls show up, that's going to push it up. But I think the way to push it up would be to embolden those bears. So I think selling is going to drive things up. Buyers failing would give the bears a chance. So look for then a sample and down. And then if we get just a straight burn off day, prices will move in ranging patterns and tension will likely aggressively burn off and there's not a lot of activity. And you just treat that type of day like a big fat range. When you're like, tension's moving down and there's nobody losing money, you say, oh, this is a range. Okay, so there's those 3 scenarios that I think are very, very likely. Your job is to figure out which one is coalescing into reality. I have shown you where that we can go. Then you need to pick up data points and say, I can see that this one is happening and we have data that justifies it. And then that's where we're headed. So those are the 3 things. I think this is a pretty interesting market because this is tense. I think that the things that have been going on, I was like, Monday was nuts. Like all afternoon, I was like, I was so annoyed. And then today we had blow off and I was like, yes, some selling, but it didn't really work. Buyers coming in and they're finally going, yes, and they just went for it. And it was great. It took a day longer than I really wanted, but things worked great. We made money. It was good. So that's where we're at. Hopefully this helps. If you have questions and stuff, I think that you should ask. Really what you want to do is pull up the charts. You can use the Zoom. You can, if I'm on here, if you have the charts, however you do it, look for the data points, look at how it is, see what's happening. And your job isn't to, it's not to trade the data points, it's to trade what's going on. So figure out what's going on and then be like, well, what do I think I would want to do with this story? What's happening, the narrative, and then do that. So I have this. I did drink some water this morning, quite a bit actually. So that's where we're at. I hope this helps and you have clear, like you can clearly see the avenues we could go down, and that tomorrow morning you need to keep this in mind. This morning was very similar. I think it's a big deal because I think that maybe it's not a lot of traders, but I feel like I'm not making it clear enough that we're building realities that help you see what's going to happen in the morning. And that's what gives us a precedent, or that's what gives us an edge, is that you can see what's going on. And then as you see events, you could say, that makes sense for this or that, and you want to look for the most amount of conflict. And conflict doesn't mean 2 people fighting. Conflict is drama. It's stress. It's pressure. Seeing the market get bullish today and then folding back down and giving them a decay retest. It's like, it's almost like the drama is between the bulls and the market more than the bulls and the bears. But that's not always true. But in this case, it was like, oh my gosh, like the bulls knew it was going up and it folded back over. That's the point to get in, because it's like there's drama there. There's this conflict. I don't know if you need to, but I like to wait for situations where I disagree. That's what I like. because I'm sitting there saying, I know what's happening. And if markets are doing something that I completely disagree with, that also means opportunity. When things do the opposite of what you think they should be doing, that's an opportunity to take advantage of them then going back to what you think they were going to do, and it's a chance. So you need that conflict in there. It's a big deal. It's a huge deal in trading. Just because you know it's bullish doesn't mean you should buy. You should wait for the right moment, and that oftentimes presents itself as conflict, and it feels like clarity. You're like, oh, I see what's going on here. So that's kind of the way that, well, that's the way I do it. That's what I do. I mean, that's what I like to do. I wait for the conflict. I wait for that to happen. So you got a clear picture for tomorrow? Okay, I've given you that. You should look at it. I'll have the zoom up. Watch for it. When you see the data points, your goal is not to execute on the data points. Your goal is to take in the data points till you see clarity and take your favorite system or whatever you're doing and apply it to that. And those two things together should make you much more successful. Okay, I hope this helps. Good luck, guys.